please comment on the implications of our existing and perhaps continuing 0% interest rate?
Well, it's very tough for anybody who's got their investment in short-term money. If you're getting 0.1% on some money market fund currently, that if you'd started doing that when Columbus landed and didn't pay any taxes, you'd have almost doubled your money by now. It's really, I mean, people talk about easy money policies, but it isn't so easy on the people who've got the money. It won't go on forever, but it may seem like forever to people that are on fixed income. I'm very sympathetic with them that basically many of them became fearful when the world looks like it was collapsing in late 2008, and the price they pay is really, I know some people like that it's terrible in terms of returns, and their purchasing power will be eaten away. But this will end at some point. I don't know how it will end, but I would not like to be chairman of the Fed or Secretary of the Treasury. Nobody's ever asked me, but maybe that's why I say I wouldn't want to do it. But it won't work forever to run huge budget deficits and try and have very easy monetary policy. And if we do run into trouble, the blame should not go to the Fed. The blame should go to Congress.
In some sense, the reality of our situation is almost amusingly depressing. Stocks are up because the return from loaning your money out at interest in a safe way is so lousy. And of course, one answer is that can't last, in which case stocks won't be as pronounced a value, relatively speaking. And of course, if it does last, as it has in Japan, we won't like that either, because it will mean we're mired in some horrible stagnation. This is a very cheery message.
The pressure that is exerted by extremely low interest rates, short-term rates, on the value of everything else it's hard to overestimate that. I mean, the reason people have their money out at 0.1% is that they're afraid of everything else. But as their being afraid of everything else abates, as it has over the last couple of years, the pressure to push stock prices up, push real estate prices back up, it's enormous. And of course, that's understood by people who have something to do with those matters. But I don't think you should underestimate the degree to which the last year of stock prices has been a result of the agony that people are being put through that keep their money in short-term money instruments. Unless they're terrified of the world, they get pushed into other investments. And I think we've seen a lot of that, and we'll see what happens when money rates do go up, if they do.